Investors are already well aware of the African growth story and many have benefited already. Investors in the Prescient Africa Equity Fund enjoyed returns of over 50% in 2012 as African markets rallied. Portfolio Manager and Chief Investment Officer Eldria Fraser joins us from Cape Town to tell whether the performance can be repeated and where the opportunities lie in 2013. Eldria, thanks very much for joining us on the show today, and obviously we want to find out if the returns that you delivered last year are going to be repeated in 2013.
I think to have 2 years of 50% will probably be quite a challenge. But if markets and if growth prevails, then hopefully there will be another good year, but I would reckon not 50.
Okay, it was a trick question, but I just wanted to, before we get into some of the opportunities that lie ahead in 2013 and beyond, I just wanted to get a feel for whether 50% was generated. Can you give us a bit of a rundown as to which markets delivered those returns? Obviously 50% is the average, so I'd be interested to hear which markets were north of 50% and which markets were a little bit below that.
Yeah, they all did well, but the main push came from Kenya and Nigeria. With Egypt, obviously that they are still in a bit of turmoil, so Egypt was one of the laggards last year.
Just in terms of the Kenyan performance, we know that the elections that were coming up had led to a bit of paralysis, I think economically you could call it that. Companies were kind of waiting for things to happen ahead of the elections, and yet Kenya still delivered a very strong return. Can you just fill us in there as to what actually happened? Was that performance coming from the early part of the year as investment managers like yourself, I guess, bought into the market ahead of the elections?
Well, you know, Kenya still delivered over 5% economic growth. So although the elections came up this year, the growth continued in the economy. And I think we've seen now that the elections have come to pass, and although it wasn't completely without any violence, it again happened relatively smoothly. And you know, I think the story is similar to elsewhere in Africa as well, where there's actually a consumer-led story. You can capture that through a lot of the banks, and something like a Safaricom that did phenomenally well and continues to do so after 2 years of price wars that's come through, you know, with flying colours, and they've continued to innovate.
Eldria, this is a big theme, obviously, not only the African consumer, but the emerging market consumer, and we talk about trying to get a sense of the services and the products that the consumer wants. But I just wanted to dig into that a little bit further and try and understand what it is that's driving this wave of people moving from poverty into the middle class and beyond. What are you seeing, or what's your sort of take on things on the ground level where that are allowing people to find employment and increase their incomes that have led to this massive surge in the middle class?
Well, we're not sort of the economists of Africa, but if we just look at the companies, what we do see is that there is definitely a growth in the middle class. Obviously, as you have economies that grow very fast, Nigeria, there's a lot of oil production that gives scope for new businesses to start. And I think then as people enjoy that, they change their spending patterns as well. So we see a great demand for particularly branded product. You see a great demand for services like banking services. Obviously, the telecom industry, that they have benefited significantly as people have used mobile phones for connectivity and also for banking purposes. You know, so we've seen a lot of growth, not just only in the pure consumer areas, but also in the other consumer-driven companies.
Just in terms of the mandate, does the fund have the ability to then invest in companies that are providing services or products onto the continent, but maybe listed elsewhere, or is it only relating to companies listed on African exchanges that you can invest in?
We can invest in what we would call an off-benchmark bet. At this point in time, we don't have any such positions in the portfolio because we find a lot of opportunities in Africa itself.
And I think just for the benefit of our audience, I know I'm kind of familiar getting my head around the way you go about selecting stocks, but just tell us about this quantitative approach that you are taking across all your portfolios at Prescient.
Okay. I think often when people hear the word quants, they think it's some sort of black box that spits out answers to you, and that's not at all what it is. We follow very pragmatic investment principles looking for valuation, but we just exploit it in a different manner using numbers and mathematics, so it comes through in a quantitative way. So what do we have in our portfolio? We have shares that exhibit very good valuations, and obviously that is something that I think most people want in their portfolio, because if you have value and it retraces to its intrinsic value, you make a lot of money. And if markets fall and you have a value portfolio, it tends to fall slightly less. But that's not the only thing we have in our portfolio. I'm sure most people will know that last year valuation biased portfolios underperformed quite severely. So we also have a momentum or sentiment component in our portfolio. And the key reason for that is that stabilizes the portfolio to give consistent performance or consistent outperformance over time. And then we also look at the interplay between valuation and momentum, because sometimes a deep value stock is there because it's not going to recover, and momentum or sentiment helps you to avoid those, and vice versa. You don't want to buy a share that's run up but where there's no valuation. So we look at the interplay between the two as well. But it's a very pragmatic valuation-driven sentiment that is captured in a quantitative matter.
So would it be fair then, if I understand this correctly, that on the valuation leg of your portfolios, you're obviously looking for companies that are undervalued relative to what your expectation of fair value is. So that would naturally be the starting point there. But on the momentum side, you can often find that companies that might be overvalued according to your models will be included because the sentiment around them is so positive.
Yes, so valuations, we look at things like dividend yield, what do you actually get into your back pocket. We look at things like net asset value, so that will be more for a holdings company. We look at cash flows that companies generate, and we also look at trading profits, because not all companies are valued exactly the same. A company that has a high growth phase, people may look more at top line growth, so trading profit is important, where a holdings company, obviously you look at NAV, so it's not just one thing that we would consider. And it's exactly right that sometimes the valuation doesn't always capture correctly what will happen into the future, where sentiment or momentum can do that. And I think the great beauty of using the two together is that markets trend according to different styles, and when valuation is out of favor, you will find that momentum really does well, and that will offset and keep your performance on track. So that's why we use a combination of both.
Eldria, in terms of that weighting then, do you have a set limit as to how much of the portfolio will go into the valuation leg versus how much in the momentum, or is it something that's dynamic and can change just according to what's happening in the market?
Yes. So there's the three legs. There's valuation, there's momentum, and then what we call an interaction between the two. And those weights change dynamically as the market moves from one style to another. So it's not a set limit that we put on it, but we let it vary as the market tells us that it should vary. So it's a very dynamic process.
Okay, so we've got to the point now where we can, I think, start looking at some of the stocks that have been included in the portfolio at this point. And just to give our viewers a sense, you focus your activities really around the Kenyan, Egyptian, Mauritius, Tunisian, and Moroccan markets. Are there any other stocks that you look at outside of those, or are those just the key markets at this point in time?
Those are the key markets, and that's mostly based on liquidity and size of market. And obviously we exclude South Africa from that because most of our clients already have a fair amount of South African exposure. And we can move outside of that, but at this point, as I said before, we don't have that. And I think if you want to look at where the portfolio is right now, a lot of the value we find in particularly Kenya and away from a place like Egypt. And then also the sectors would be predominantly in the financial sector, and then also the telecommunication sectors. Banking is concentrated more so in Nigeria, but also Kenya as well. And we are mostly underweight more of your consumer type or direct consumer type shares.
You've mentioned Safaricom, and I came across Safaricom, I think at the time a few years ago I had a joint venture with Equity Bank, or it was co-owned. Sorry, I might be getting a little bit confused here, but Safaricom is one of the big mobile telephone players in Kenya, but it also does, it allows their clients to transact money electronically. Just tell us a little bit more about that company, because I struggle sometimes to decide whether it's actually a bank or a mobile telephone company. It sort of overlaps the two areas.
Yeah, that's right. I think they are a great example of how a company can morph to capture, I think, the market share in a very efficient way. So yes, they're a telecommunication provider, and they have about 80% of the market share in Kenya, so they are the largest player. There's been 2 years of price wars where new entrants to the market try to undercut Safaricom, but a lot of the other providers are not profitable, so Safaricom has come through that with flying colours, and I think the loyalty that they have from their subscriber base is quite good. And you are right, they offer transactional or transfer banking, the M-Pesa, I think most people are aware of it, and that's done with a partnership with CBA. And they've now also moved into a new space. So as I said, they are an innovative company, and together with a bank they are offering Mshwari, which is a micro lending and also investment that you now can do via your cell phone. So very innovative in terms of banking, as well as providing, I suppose, value-added service to their customer base.
Eldria, just one last question before we have to go, and that's obviously around another big theme in the portfolio, which is some of the Nigerian banks. You've said here some of the overweight shares are Access Bank, Zenith Bank, and First Bank of Nigeria. Can you just give us a bit of a feel as to what's going on in the Nigerian banking market at this point?
Yeah. I think the Nigerian banking over the last few years have been cleaned up substantially, and the call for additional reserves that came from the government, and that's been done, and also for banks to disinvest from what is believed to be non-core assets, so they're quite focused. You have a massive growth of obviously the middle classes in Nigeria. Nigeria has 170 million people, and a lot of the population is unbanked. So for them to move into that unbanked space and also into the growing middle class gives obviously a very good catchment for new clients. So I think they've done that very well. Also using telecommunication type lines to interact with clients, and then also, the more ATMs and so forth you can roll out, and the more people you can reach. And First Bank of Nigeria has done particularly well in that regard. So I think that's the key growth area, is to capture the unbanked people and to grow off the very large population base in Nigeria.